All right, good morning, everybody, and welcome to those of you that are watching the replay. Today is June 2nd. We're just past the Memorial Day weekend and headed into June, which is last month of the first half of the year. Hope everybody had a good weekend, good long holiday weekend. Market was kind of boring, couple of days ahead of the weekend, and as we speak right now, basically the S&P's almost right up against the high for all intents and purposes, which jump to the chart here. There you go. I set this up so that we'd start off with a little bit of a longer term view here of the S&P, and basically what you're looking at here is market pushed right up against the all-time highs. As a matter of fact, yesterday I believe that the S&P actually like poked at a new high intraday. But there's the longer term view, and you can see I need to extend this trend line a little bit here, but that's the major trend line, which has yet to be breached basically all year. Now, of course, this this touch right here is essentially what I drew the trend line between was these two lows right here. So, but anyway, there's been a couple of little minor dips, and more recently, a couple of dips that you can see as I zoom in here, but haven't breached the trend line. So yesterday was really kind of crazy. After the long holiday weekend, right? Market gapped up fairly significantly and proceeded to sell down all day long. That's basically what happened. And so those are kind of weird days. And of course, everybody knows that everybody's heard and or seen that, and I think it's something like, 8 or 9 days in a row here, the market actually gapped up. And you can see that, yesterday, the day before that, skip a day, and over here, the market traded higher. Well, it gapped up. I should say traded higher overnight. The futures did, and then so the market gaps up, and then a lot of times it just sort of sells down. But you can see these 3 days ahead of the Memorial Day weekend were just really super dull, nothing days. You can tell by the narrow ranges there. And yesterday was, I wouldn't call it a long range day, but it was more exciting than than the days leading up to the holiday weekend. So anyway, it's a holiday shortened week. Today's Wednesday already. Yesterday sure felt like a Monday. If we look around at some of the other indexes, the the Qs have been pretty resilient here as far as the bounce over the past couple of weeks here, but you can see it's still kind of below this prior peak here, and there's the all-time highs in the NASDAQ. And so, again, I'll later on I'll extend these trend lines, but everything's basically just kind of drifting and holding above the major trend lines. You can see that the NASDAQ's inside of yesterday's range, and prior to that, again, it was a few boring days. So it was a pretty boring week, but there's been some action, but just not last week or right now. So it doesn't seem like there's a whole lot going on in the news that really caused the market to move either way. I did see something yesterday, and this is what I'm guessing spooked the market a little bit because it, gapped up and then traded down. But I believe what spooked the market a little bit was that Joe Biden was talking about making capital gains taxes on the wealthy retroactive to like April or something, which I thought was kind of weird. Instead of making it, retroactive to the beginning of the year, he was suggested making it retroactive to where he first mentioned it, which I thought was kind of strange. But I don't know. I mean, the market, it's not getting a whole lot of talk. There's not a whole lot of discussion and or talk, so maybe it won't fly. I don't know. And then of course there's the $6 trillion budget that he's proposed. You can see the Russell 2000 is basically just trapped in this big sort of range here, going sideways since February, essentially. And seems like, lately when it gets up here towards the top end of the range, it sells down a little bit. When it gets to the lower end of the range, it bounces. So, yeah, I don't know what to make of that. I mean, it's just a big sideways sort of pattern. And, it kind of makes for a dull market. The Russell 2000 is not really trending like it was back here, right? I mean, last fall into the new year, into February, I mean, we had a trend going, and now, while it may seem like, every couple of weeks you get a little bit of a trending action, the bigger picture is that it's essentially sort of trapped in a sideways range. So let's look at a few of the sectors here. Here's XLK technology, sold down a little bit. This last little sell-off here and then this bounce here's what I believe triggered in most of, I would say, the majority of the open trades that we have right now. Energy's been really strong here. XLE, look at that. XLE rallying up and threatening to break out of this little consolidation here. Been consolidating for a few weeks and it's made a higher high. So energy's looking pretty good. Oil is pushing $70 a barrel. I see people complaining about the price at the pumps. Gas is $2.81 a gallon here and has been for some time. The financials have been acting pretty strong here too. Financials are actually sort of trending, but you can see that there's been a consolidation here, and they're basically yesterday trying to break out here. I wanted to look at the semiconductors, because the semiconductors are a lot of the open trades that we have, which, by the way, I'm looking over here, and it was interesting. Yesterday they all opened up green, and then as the market dropped, they went red, but it's a pretty good trend going here, right? I mean, even with yesterday's price action, they opened and pushed a little bit higher and then kind of reversed with the overall market, but they are, at the current time anyway, sort of in a little bit of an uptrend here. So let's take a look at, before we jump into the open trades, I wanted to look at this arc here, which is kind of a bellwether for the momentum stocks. You can see that it had that big sell down, right, and then rallied a bit, and then the past couple of days kind of looks like it ran into some resistance and is going to pull back here. So it's going to be interesting to see what happens with this. See if this low holds here. For a while there, the over/under was 100, and it poked below 100 a couple of times, but you can see, it's still significantly down from the highs. I could probably draw a trend line across from these highs across these highs, and just based on that, it would be an avoid. I'd say to avoid it until and unless it can break that trend line. But it's going to be interesting to watch going forward to see what it does. So I thought today what we would do is take a look at the open trades. Let's see what they look like on the screen here. So there's the open trades. The way that my screen setup is now, it's a little bit weird because I'm using these new charts is basically why. So these, but I'm getting used to them, right? You'll see in a minute here that I've got most of them actually marked up, and there might be a couple little things, like I know on one of them, I think it's the very last one, the one that's been open the oldest, I marked it all up and then I switched to something and didn't save it. And these crazy charts here, This is the stock charts ACP is what they call it, which I'm not even sure what that stands for, but it's their, it's not the old classic stock charts, which is kind of clunky. It's the new version of stock charts, like their newest, latest, and greatest. And I kind of like it. I actually do like it a bit, but at the same time, there's certain things about it that are kind of that I don't like, right? Um, One is that every time I pull up a chart, I have to like drag it to the left because it's kind of crunches it right up against the price scale. And normally I like to have some distance between the price scale and the current bars, like some margin right here. But anyway, and then a lot of times I end up dragging that. So most charts, I know the regular stock charts, you can set like, they call it extra bars or whatever, but basically it's a right side margin. Once you set it as a default, then it stays like that. So, and then the other thing that bugs me just real quick here is, and I haven't figured this out, and I don't know if there's a way to do it, is to like increase the density of the price scale, right? So, I mean, sometimes when you zoom in like this, okay, so there's $10 increments there, and you can see it shift a little bit to $5 increments, but that's a function of how far you're zoomed in. It would be nice if to be able to increase the density of the price scale. That's all I'm saying. But anyway, so without further ado, this is the other last little thing that I'll mention here real quick is like what I'm used to when I was using the free stock charts. I could just grab this and just drag it over, and then it would just stay, right? But if I were to grab this, then what it does, well, I'll show you. It opens up. First of all, it opens up all the drawing tools, and then it puts like a trend line right there that I didn't even, just because I guess that's like the default or whatever. I don't know, but it's kind of annoying that this like pops open like that. That bugs me a little bit. So anyway, that's why that's why I try and mark these things up ahead of time, and I don't really do a lot of drawing on the show because it's just tedious the way that it works. So anyway, what would be better is if I clicked on the drawing tools, and instead of like expanding inwards into my chart, if it expanded to the left and didn't affect what I was looking at on the chart. So anyway, here's Shake Shack. So let's see, 526. We had a couple of these stocks trigger in here. So basically this day you got the first close above the trigger price. Next day it gapped up a little bit. Let's see, what was that? That open there was 91.85. So I didn't draw the compensation target on here, but it would be 101.85 would be the that would be the target to compensate for this gap if you actually, pulled the trigger at the open and got filled at that price, which, may or may not have actually happened, because typically the exact open price is not always going to be, if the market opens and like I was talking about last week, you wait for, a couple of minutes or whatever, let the thing actually start trading. Over the years, I've noticed that when a stock first opens up, that there's a few trades that go off, and they can be like sort of like random. A few trades go off like in random spots or whatever, and then like maybe 10 15 seconds later, maybe some stocks it's like a minute later, you get the actual opening price where the stock starts trading. Right? And so just for the fun of it, let me zoom into. I just want to see what this one looks like here. So let's see, the 26th, yeah, 26. So you can see that like right at, well, let me see how I can zoom in on that more. 525. So there was the gap. There's 526. Haven't spent a lot of time doing this, but anyway, so yeah, so I mean, theoretically it opened right here and then dropped, but let me go back to my daily chart here. Yeah, I was gonna try and figure out like what it looked like right at the open, but sometimes it's difficult. And that doesn't even, I'm not even sure that I was looking at the right thing, but point of it is that generally speaking, you want to wait until a stock is actually, and I have like the time and sales up, so I can see when it's actually starts trading, as opposed to like a couple of trades that just go off like right at the open that can be kind of outside the range a lot of times, right? So probably best to wait. And so point of the point of it is that you're probably not going to get filled right at the exact opening price. Maybe a little bit higher, maybe a little bit lower, but the idea, and this is a good example because the numbers are round. And so if the trigger's 90 and the target's 100, wherever you would have gotten filled, right? Maybe you waited for a minute and pulled the trigger and got filled at just 90 and change. So the point is that all you got to do is just add the difference to the target, right? And that's what you're shooting for your target. So it may, on this one, it may be 101, or it may be $100.50 or whatever, or maybe 102 if you waited a little bit and got in like a couple of bucks higher. So, but anyway, and then of course there's always the idea. I talk about this, but let me just reiterate real quick. There's three ways to take an entry. One is it just get in shortly after the open on the day it triggers in. Don't sweat the small stuff because the ones that work tend to work, right? So that's the first way. You just take your position and then set the stop. You could figure out your target based on what I was just talking about, and then put those in at your broker and just let the trade play. The only thing you got to do is manage the stop when it moves. The other one is you take half the position and see with zero commissions, it's totally feasible to break the buy up into a couple of different orders. You take a half a position, like where it gaps up here, and then you set a limit order for the other half at the trigger price, right? So sometimes you get a little bit better average cost if a stock gaps up. And the third way is to just set a limit order right at the trigger price. And sometimes if there's like this last little round here when you got like five or six stocks all triggering in at the same time, sometimes setting a limit order at the trigger price, after it confirms, obviously, you still want to wait for that the first day close, like after the market closes, it's closed above the trigger, so it's going to trigger the next morning. But you could just place a limit order, good till canceled at the trigger price, and leave it in there for a few days, and then that will help you pick and choose, right? Like if you're not going to buy every single stock, which we don't necessarily recommend, and so there's some picking and choosing. There are several ways to do that. One is you can go through and look at the charts and figure out which ones that you think look the best, based on the chart pattern. And I do that when I go through. Sometimes I'll go through the pending trades and look through the chart patterns, and sometimes I find one or two that I think that the setup looks better than the others. But so that's a way of picking and choosing. The other one obviously is using the volatility. If you favor, less volatile stocks or more volatile stocks that can move a lot faster, that's another way to pick and choose. But the other way to pick and choose is set limit orders at the trigger price and see which ones actually fill. So, but anyway, so yeah, there's three ways of taking the entry there, and so far so good on this. Not looking too bad here. Shake Shack. Pretty big sell down, and then you can see it rallied right back up to the gap, and is basically, sort of floundering around here. So it's going to need to get up and into that gap. And of course, with yesterday's session being kind of weak, it's hard to tell what's going to happen from here. Now the market itself seems to be acting a little bit stronger, but it's a market of stocks, right? So the Dow can go up on a particular day, like the Dow's up 90 here, and like, all the tech stocks can be red, the NASDAQ can be down. And that's happened a lot lately, and I'm not sure what to make of it, but the only thing I can think of is that what it reminds me of is like back in 99 and 2000, the Dow and the NASDAQ got really disconnected, and the Nasdaq would be up one day and the Dow would be down, and vice versa, and that sort of behavior preceded the market tanking in 2000. So it makes me a little bit cautious. But anyway, yeah, it's kind of weird that then there's this whole, they talk about the reopening trade and the reflation trade and all that, and so it really is a market of stocks. You can see by looking at that arc that something like that's all in like the new technology momentum growth stocks or whatever is significantly off of the highs compared to the indexes. So the indexes are really comprised of, they're just overweighted in the same 6 or 7 stocks that we all know, and they're so heavily weighted in those particular stocks that they don't necessarily reflect reality as far as what's really going on in the market. Sometimes I think that the Russell 2000 is, and obviously it's 2,000 stocks, but sometimes I think that that's a better barometer of what's happening in the market than the Nasdaq or the S&P or the Dow. So, all right, well, moving on here. Let's see. Planet Fitness is this thing's looking pretty nasty here, quite frankly. This is one of the ones that triggered in and is looking like it's going to tag that stop here. So that happens. Today's low is 76.64, so it just managed to hold above this stop here. And sometimes that happens. It's kind of rare that, but it does happen on occasion. Out of every, I'm going to say out of maybe 1 out of every 20, or I don't know the exact figure, will trigger in and then just like never make it past there and just kind of reverse. And so this one's looking like that. This could potentially rally up today, and it wouldn't look too bad if it rallied back up and went green or whatever. I mean, this could have been like the sell down. The idea of the initial stop is that it's supposed to be wide enough, theoretically, it's supposed to be wide enough to allow for like a normal pullback in the price action. But this one's just kind of like a little fake out. Now I could draw a trend line across here, and I mean there was a decent trend line break, and everything about this kind of, you can see how it sells down and then bounces, and a couple of times over here it was pretty volatile over here. There was a couple times it sold down and it bounced and then pulled back in. So this stop looks like it's a little bit tight to me, but it is what it is. If it was if it was a little bit lower down here, I think but sometimes they work and sometimes they don't. So this one's a little dicey right here. May get stopped out. Intel seems to be doing okay here. It's basically had a big long sell down. This is, I remember Intel was one of the first ones that hit the list on this current batch, like way back over here. Might have been before the beginning of May. It was on the pending list, and it took a while to trigger in, but right now it just seems to be sort of yeah, these charts they do take a little getting used to, but you can see what I was about to say is that typically on, I'm going to say like 90% of, maybe more, but 90% of the trades that trigger in at least get enough forward traction so that the initial stop trails up a little bit, right? Reduces the full stop. So a full stop out is, and this system uses pretty tight stops anyway. So it's over the past few years since we came out with this new one, there's only been just a minuscule handful of double-digit stop outs, and so typically the stop outs percentage-wise are pretty minimal to begin with, and so not a huge big deal if one gets stopped out. And but the idea is that as soon as we get just enough forward movement past the trigger price, the initial stop is gonna trail up a little bit, and that's the idea, right? And so, and then basically once the stop gets close to break even, then it's just a matter of which ones actually get traction and momentum going forward, and the ones that really work, they blast right through the target and just keep going, and then that trailing stop comes up. So anyway, this, we kind of got a fresh batch of stocks here anyway. So a lot of these are, have only been open for, a week or so, a little over a week. And then a couple of days of that was basically nothing days, very low volume ahead of the Memorial Day weekend. So anyway, so far so good on Intel. It's it's kind of trading sideways here, but it looks okay today. The fact that it's actually not selling off after yesterday's little sort of down move there, the fact that it's rallying again is looks like a pretty positive sign. So there you go. Let's see, moving down the list here. TSEM. Yeah, so I mean this thing rallied sort of out of the gate, and then just kind of some weird price action, right? It's like two steps forward, one step back. Or actually, it's like two steps forward, two steps back on one day. And so it's just basically, it's just kind of range bound here, and you can see it's trying to get some forward momentum, and then it gets sold all the way back to 27 bucks. And so anyway, on this particular one, based on this gap up, like this is the day it triggered in right here, and then the following morning it gapped up, and so based on that, I drew the compensation target to compensate for that gap, and so it's got a little work to do to get up there. It's just kind of hanging out, but you can see that the trailing stop has moved up, really sort of close to even let's see what this open was right here. This open right here was 27.34. And so with the trailing stop at 26.50, I mean that's less than a buck right there. And so I suppose that's actually a good thing because if for whatever reason that was the extent of the rally and it's just going to roll back over, better off just like cutting it short. So that's part of the idea of having these trailing stops ratchet up relatively quickly, is that the old saying, let your winners run and cut your losers short. And so there's going to be times where the trailing stop comes up, it gets tagged, maybe the stock goes a little bit lower than that, and then reverses and rallies and goes on to have the big uptrend. But that's just sort of the nature of the game. And so I think, well, the way everything was designed is that getting the trailing stop up close to break even to minimize the risk is a better strategy than like sticking the stop way down here and just letting it go, right? Because that way, the ones that take off and move in our favor, then they go and hit the target's net, and then the other ones get weeded out, and then that same theoretically that same money can get put to work in something that is working. So yeah, here's a decent example of one that basically it triggered in, it gapped up a little bit, and then just went straight up and hit the targets, right? So that's kind of the ideal situation. Now, of course, now it's seems to be struggling a little bit, but here's a good example of what I was talking about last week, is that when they work, they tend to work. And so, on the very same day that it hit the target, it also tagged the compensation target. What I mean, I call it the C target, but the compensation target is compensating for this gap up right here. Like here's the trigger price is down here. That was the trigger price, 127.50, and then this is the day where it would have filled, right around the open at 130.11. So, it was a couple of not quite $3, but a couple of bucks higher. You got that gap up, and so you compensate for that by just increasing the target, and then basically you're getting the same type of move, right? So I think everybody understands that. But anyway, so there you go. Just like I said, the ones that work. There's been a few times. There's a few of them that will hit the target, and may or may not quite make it to the C target at the same time. Sometimes it takes a little bit longer. Sometimes they pull back first, but most times I've found that and that's another reason that you don't necessarily want to sweat the gap ups too much. Um, you know, Stocks tend to gap up and gap down significantly lately, and that's just sort of the nature of the business. It's a strange thing, but like I said before, the big market moves tend to come overnight. So anyway, there you go. Trailing stop is up here, and so the idea is that you can the idea of the targets is to take half the position off at the target and let the rest ride with the trailing stop. Now, you could potentially choose to just sell it all at the target, take the win, and move on, wait for the next one. And so that's viable. But over the longer term, what we found is that the real advantage comes from the handful of stocks, the handful of trades, and this is honestly got a beautiful looking chart here, and of course you got to be a little bit patient. That's what this is, swing trading. You're holding a stock for, couple of weeks or longer. I won't say a couple of months because it's very rare, but it has happened. We've had some positions that are open for a while, but something like this looks like it could consolidate and just keep trending up and sort of form like a big cup here. And so this to me looks like it's sort of just getting started. So something like this. It depends on what you want to do. There's a lot of discretion that can be employed here on this particular chart. This looks like it could easily trend much higher. And so my point is that the system was designed so that you take half off at the target, let the other half ride with the trailing stop, and then occasionally you're going to catch one of those 30 percenters like we've seen in the past. So, and that's where the you know that's where kind of hanging on for the bigger move comes into play. So, all right, let's move on here. Let's move on. MRVL. Here's a good example of here's a good example of one that has it's made it to the target, but if you got in, like say at the open this day, which is basically if you got in at any point the day that it became an official open trade, right? Because it actually closed fairly significantly higher than the actual trigger, right? Trigger at 45 there, and then this was the buy day. So you can see I got the compensation target. But anyway, so it's made it to the target, which is great, but in theory it needs to make it up to here. So, but so far so good. A little bit of a sell-off yesterday, but that's just basically what the overall market did, and so we're just kind of typically around the holiday weekend, the couple of days before it, and then we got a holiday shortened week this week, but a day or two afterwards or whatever. A lot of times is just so it just seems like people are doing other stuff, right? The participation and volume's kind of low, so I'm not reading a whole lot into the current market. I did see a stat yesterday that said something. I think I saw this on CNBC. June, and June has not been a down month since 2015, I think it was. Yeah. So like every June since 2015 has been higher for the market. So when they say that, I guess they're probably talking about the S&P, I guess. I don't know. Sometimes you got to be a little wary because and I didn't actually catch that. I didn't catch whether they were talking about the S&P or the Dow. But because sometimes they like to pull these stats, out for the Dow Jones Industrial Average and call that the market. But I glanced at the S&P chart, and there was a couple of Junes where just it was such a minuscule gain for the month, but it was higher. And so I believe that was and that's what popped into my head at the time. I was like, is that true? Because that's a long time, 2015 to those are the last 5 years. So every June, the market ends higher since 2015. It's been the last time that a June was down. So it'll be interesting to see if that holds true. I don't put a whole lot of weight into all that seasonality stuff, right? So just when you can throw out these stats like that, and then, but that doesn't have any bearing, if you've ever studied statistics. I mean, just because June tends to be, and they love to throw out stats like that, like June is positive 80% of the time since. And then they pick a random year to use for their data set. And seasonality is, I mean, there's obviously something to it, but I really think that modern day, a lot of seasonality, especially the longer you go back, is based on, weird stuff that's no longer relevant, right? In this modern era, a lot of that old seasonality stuff you know, isn't necessarily relevant, and the longer you go back, you're talking about stocks that traded in fractions, and then, people trading stocks by hand and paper and stuff like that. I mean, it wasn't, there was no computerized trading, so I don't put a whole lot of weight in seasonality. Anyway, moving on here. One of the issues that I run across with these charts, and there's a couple of spots. I don't know if this one, I'm sure that there's another trailing stop in between the initial stop and this one I marked up last night. But sometimes I put them on here, and then if I forget to click save, it doesn't prompt me, and so like my markups disappear. So, and that happened on the very last one on this list here. When I pulled it up, everything had disappeared because I guess I just forgot to click save when I marked it up. So, but anyhow, so far so good on this. Brooks PRI automation. This is another one that's got some pretty decent traction. Made it to the target. Didn't quite make it to the C target, and so, but still looking pretty good, hanging out. The trailing stop has moved up, and like I said, I'm sure there's the initial stop was down here, and then there's probably one other stop here that didn't get saved, and so this trailing stop's come up pretty far. So far, so good on that. All right, let's get through this list here, and there's Twitter. Decent little rally through the trigger. Trailing stop has come up to right around the area of the trigger price, and looks like it would have triggered in a little bit higher, maybe 55 or so here, and everything looking good here. Other than the fact that it's just kind of losing its mojo here, but that can change. That can change relatively quickly, right? So you get a little sideways movement, and then it's got a pretty decent little pattern going here, right? So the idea is that the trailing stop's going to hang back enough so that it could pull back, have a little bit of a cycle down and then resume the uptrend. So if not, then it's just going to be, pretty much of a wash. It's a very small stop out. And so that's the idea. Don't want the trailing stop to move up too quick, right? Because you don't want to get knocked out like on the first pullback, but so it seems to be hanging back like just far enough, and so all we're looking for here is a nice move. In days like today, I mean, it's kind of starts off weak, and you never know. Sometimes they do this. They start off a little bit weak, and then this thing could go green and end up. But it needs to break out of these highs from last week here, and then it's on its way. So, and then last but not least is this XLRN, which is the one I had to redraw everything on because I guess I forgot to save it or something. I mean, I could have sworn that last week when I did the show, all my marks were on here. Right? Because this is the one at the bottom of the list that's been open the longest, and I know I had this sucker marked up, and then I came back to it last night, and all my stuff was gone. So I don't have the initial stop. I don't remember where the initial stop was. It was way down here, but I don't even have the target drawn on here anymore. I guess I could put that on here. So let's see the target 135. Just for the fun of it, I will go ahead and mark that on here. So there's the regular target there. Boy, it came really close to it. So I got to hit that, and then I got to come up here and hit save, and I got to click this and then hit save. If I don't do that, whoops, and so I'm gonna put a note here. Target 135 and hit save. Right? And so here's the funny thing is, so if I forget to save it now, that won't be on here. So I gotta save it again, and there's no prompts to save it, and so that's why that's one of the little things here that's kind of annoying. So anyways, that's basically the look through all of these open positions here, and this one came really, really close to tagging this target. And so here's the other thing on this is, real quick before I wrap this up, notice that okay, this is the day that it triggered in. So trigger 123.50, looks like it opened at about 125. So there's a couple of bucks on the compensation target, depending on where you would have gotten filled here. But you can see that it actually, the day it triggered in, the following day it gapped down. Right, it was still above the actual trigger price, but it gapped down, and so you'll see that there was one of these that actually triggered in, gapped below the trigger and triggered in on the way up, but somewhere on that list. I didn't point it out when we talked about it. So anyways, no big deal here. Came really close to the target, and a lot of these are just kind of hanging in there, right? They've rallied up, and then they're just kind of in sideways mode. But that seems to be what the overall market is doing right now, right? The overall market's just kind of, other than yesterday's gap up, if it had just basically, opened a little bit higher and traded in that range, you can see that, it's essentially we've been going sideways now for 6 days with a little bit of a forward progress. It's kind of interesting how these 2 days kind of are not quite a mirror image, but very close to it. You can see, look at how they opened at almost the exact same level, right? So like right here, basically, and I have the SPY on here because that tends to reflect the opening price better than the SPX index. So yeah, it's kind of interesting to see those 2 days it opened at 422.50 roughly, and then just, essentially sold down the rest of the day. So more interesting was over here how it sold down, and then the following day, had that major gap. I don't even remember what that news was about, but that little 3-day sell-off right there was, I think it was around 3%. So, and then just whatever spooked the market there, just instantly sort of evaporated. So it was kind of some strange price action there. And usually when you see that kind of stuff, the market might be in for a little bit more of a sell-off. But you can see that as long as it's above this trend line, then, and I don't know what the catalyst would be to break that trend line. It kind of looks like it's just consolidating to bust out the new highs. Really, I mean, with that sort of flat top right there, it really looks like it wants to break out. But if there's some sort of real negative catalyst, and there's plenty of available ones out there, right? But if this trend line gets broken, hey, who knows? Who knows? But, and of course, the market tends to sell off really quick too. So, but as long as that trend line goes back over a year now, right? Over a year. So, and then of course, obviously preceding that was, the pandemic sell-off. And so that's where this trend line starts. And it seems kind of unusual that it's been able to rally like this for so long. But then again, things are getting back to normal. Things have been really normal, where I am, because I'm in Florida, so things have been normal for a very long time, and that's worked out great. And so I don't feel like it's, but I read, a lot of stuff about other places that they're not, they're just now getting back to normal. So who knows? Anyway, so far so good. Thanks for tuning in, and I will see you back here